Hello, my name is Daphne Kenyon. I'm a resident scholar in tax policy at the Lincoln Institute of Land Policy. I would like to welcome you to a webinar that is part of our series called the School Funding Property Tax Connection. Today we will focus on the state of Texas. As you may know, the property tax plays a key role in the funding of public education in the United States. In the 2015-16 year, about 45% of the total revenue supporting elementary and secondary education came from local governments, and 81% of the local share came from property taxes. Put another way, over 50% of total property taxes in the US go to pay for K-12 education. Today we have a presentation and short Q&A on Texas presented by Lynn Moak, with me serving as moderator. Before we start the presentation, I'd like to instruct the audience to use Q&A for questions and to use the chat feature if they're having technical issues. I don't see any technical issues. So let me introduce Lynn Moak. Lynn Moak is a partner with Moak, Kenyon Associates. With more than 50 years of Texas education policy experience, he is widely recognized as one of the state's leading experts on school finance and accountability systems. Moak, Kenyon Associates is respected as a leading provider of information and research to Texas public schools. Moak's firm has served many of the state's largest school districts and organizations, such as the Texas Association of School Administrators, Texas Association of School Business Officials, Texas Association of School Boards, Texas School Alliance, Fast Growth School Association, and the South Texas Association of Schools. Lynn served as Deputy Commissioner of Education and as a Senior Policy Development Staff member in the Texas Education Agency, State Comptroller's Office, and Lieutenant Governor's Office. He has participated in all major school finance policy debates since the early 70s and has been called upon to be an expert witness in 6 rounds of Texas school finance litigation. He has served on the board of directors for the Association for Education, Finance, and Policy, and in 2012 received the NEFA Lifetime Achievement Award. Throughout his career, he has advocated for public education and has called for significant improvements in public education, accountability, and finance systems. Lynn, thank you so much for presenting on the property tax and school finance in Texas. The floor is yours.
Well, thank you very much for your kind introduction. Glad to be here today and look forward to talking about Texas school finance and its relationship to the property tax, which is long and historic. And as early as 1950, I can recall that about half of public school revenues came from property tax and about half came from state aid. And that relationship has been maintained over time. First slide. This graph depicts the relative growth in property values versus the state public education's spending. And from 2002, in this case, on up to 2017, you had a fairly close relationship in the growth elements that were associated on an index basis with public school spending and with property values. This was an interesting process because our Constitution, among other things, forbids the state from having a property tax. And so we have what is a state property tax represented by many because of its characteristics, but legally just barely out of court as a provision in a school finance system, which has now was tested by the court 6 times and has now finally been settled. Next slide. When we talk about property values in Texas, one of the things that we need to keep in mind is that we have a significant degree of property which is not counted as taxable in the overall scenario. The M&O taxable value for one recent year was $2.8 billion. The total exemptions, little over $1 billion for a total market value of almost $4 billion. Next slide. But these deductions come from a variety of different ways. They're looked at, not surprisingly, and many of these are found in other states as well. But we look at homestead exemptions, the loss of use of agricultural and productivity value limitation agreements for economic development purposes, Freeport exemptions, and various other elements, all constitute ways in which the overall property value established by the state. These represented major decisions by the state to ameliorate some of the effects of using a market value approach to the valuation of property at some point in the past. Next. When you look at the foundation school program, which in Texas has a long history of being a comprehensive foundation program addressing operational funding, that is to say, not INS funding nor retirement funding. But if you just look at those elements, the state-local split over most of the last decade has tended to show a significant growth in local property value and local shares and state value. And state value overall has been somewhat less than local value. But local property taxes is a major component of local revenue, provide the basis for concluding that the state has used the property tax to help finance public education for significant periods of time, as I said earlier, dating back to as early as 1950. Next. Last legislative session, which wound up in May of 2019, passed a major school finance bill, some $11 billion in total funding. With funding being used for teacher pay raises, for school funding increase, general school funding increases, and for tax compression. We come back to tax compression in a moment and just handle some of these individual elements in the process. There was a teacher pay raise as a significant element of the overall bill, with a requirement that 30% of the year-over-year revenue gain be used specifically to increase teacher compensation. Obviously, a political decision made between the legislative leadership and the advocates of teachers. They also created a new performance-based teacher pay raise, be further implemented over time, and called the teacher incentive allotment. Among the school funding increases that the state was interested in doing in reshifting some of the elements of the foundation program We had an increase in the basic allotment. We had just $6,000 from about $5,000. We had increased weights for compensatory education, new funding for early elementary, pre-K programs, increased weights for mainstream special education and students with dyslexia, increased weights for students in bilingual education, and new funding support for extending the school year at the elementary level. Now, those constituted a little more than half of the total cost of the legislation. The balance of the cost was put in place by the process of tax compression, in which essentially a legislature that was, and a governor who had been frustrated in their attempts in the past to pass meaningful tax rate reduction, worked out a new formula that we'll talk a little bit about today. That takes into account local property value growth and statewide average property value growth as elements in setting the local tax rate for maintenance and operation. So tax compression overall for the 2020-21 biennium added some $5 billion in costs as a function of tax compression and $6.5 billion as a function of new revenue to school districts. This followed a pattern that Texas has been in for decades of making a major adjustment to public school funding about once every decade. Next. Some of the allotments that were put in place in this new legislation. The small and the regular program allotment for regular education programs was significantly increased. A new or modified small and mid-sized school adjustment allotment was put in place, as was an increase in the compensatory education allotment, new allotments for early elementary education, and formula transition grants, as well as special education, and then the elimination of a high school allotment. This provided a substantial funding for a variety of programs that have overall improved the funding of education in Texas, although have been somewhat difficult to implement for a variety of reasons. Next. Talking about tax compression, the state tax compression percentage, which is determined by the state comptroller, not the Commissioner of Education, and is based upon his forecast of statewide property value growth. There are other elements of compression at the local level dealing with a maximum growth level for schools and with tax treatment of enrichment taxes. Next. If you look at the costs of the tax rate compression provisions, some $5 billion, as I mentioned a moment ago. In 2019-20 school year, the cost was about $2 billion and escalated from there. In particular, of interest are the funding estimates for 21-22 and 22-23 in terms of where that increased revenue might be drawn from in the state budget, which we'll come back to in a moment. in terms of what happens under this bill and what makes it different than others in terms of tax rate reduction, tax rate reductions are automatic. They're not based on the availability of uncommitted state funds, and they're likely to result, and this was a comment written prior to the virus discovery and implementation, but it was already likely to contribute. And so we're unsure at this point what it is we're going to be looking at in actual legislative terms. Historically, we relied quite a bit on property value growth, revenue generated by property value growth, to fund both enrollment increases and other elements. So if 2 years ago you were sitting designing House Bill 3 and deciding what to do with the overall funding level of the state, it was a rather pleasant prospect of having a significant amount of revenue on the table, some $11 billion, which could be used for the combination of property tax and school support and draw a major state majority in the state legislature. Obviously, the world has changed today, and the battle has just begun over whether the funding levels can be maintained that were so proudly adopted a couple of years ago. Let me stop there and see if there are questions or concerns that I can address at the moment.
I was thanking you for a concise and interesting explanation of key property tax and school finance issues in Texas. We did get a couple of questions, and we have time for them, but first I have a question of my own. I'm just curious about tax compression. This seems like an unusual way to provide property tax. Why do you suppose the legislature chose that method?
I mentioned in passing that there have been some frustration with prior efforts to reduce property taxes. In particular, there were tended to be prior property tax provisions tended to focus on a one-time rate decrease that was then followed up by a combination of voter action and school district action, school board action. And within a year or two, the political relief that the tax rate reduction had afforded the politicians was eliminated by the natural growth in value, especially when we had such a strong growth in value in our economy. At the time, we had a very strong sales tax growth component. We had a major oil and gas component, and we had the benefit of substantially modified revenue estimates in terms of creating what was considered an overall surplus. So the governor did not want to fall to that line of thinking as he looked at it, and his staff came up with this provision that, if you follow mathematically, effectively would eliminate the property tax in about 15 years in its entirety. Needless to say, those of us who have something to do with public schools don't really care for that characterization. But it was the political process. Of course, now we're a sales tax state, don't have an income tax, we have a business tax, but not personal income tax. But we have a tax base that has been attacked significantly by the virus. Haven't produced any numbers yet because we're all too scared to see them at this point.
Well, thanks.
Using this method, back up to using this method of tax rate compression, tax rate reductions are created by increase in property value. As value increases, the amount of the compression increases and is applied to the tax rate, with the state making up the difference. And it remains to be seen, as I said, how that all gets handled.
Now, we did get a question. You have hinted at how things have changed with the coronavirus recession, but we did get a question about when do you think the changed economic climate and the fiscal implications can start to be addressed in Texas?
Well, the legislature convenes in January of 2021. And through one mechanism or another, I think the legislature will manage to shuffle its finances around in such a way that it won't require a special session of the legislature between now and January. That being said, one of the elements of the Texas finance system is a binding revenue estimate produced by an outside third party. So the state controller, who is both the state's revenue estimator and the state's accounting officer, and the state's property tax official, all have a great deal to say with how much the legislature can actually spend of revenues available and what those revenues are. Because in order to overcome his decision, you need a 4/5 vote of the Texas legislature. So I really, as of today, I really can't say that I know what the legislature will do, but that debate should start in earnest in June, when the revised revenue forecast has been promised, and we get the first cut of how bad the numbers really are for this coming biennium.
Well, that's a helpful answer. We have time for one last question. It's a toughie. Lynn, what do you think is the most important lesson that policymakers from other states should learn from the Texas experience?
The first one was the first elements that should certainly be figure out the absolute worst thing that could happen to you in terms of your revenue package, and make sure you know how you're going to adjust to it, because it's hell not to. I think overall, a longer-term sense of financial planning is necessary and needs to be taken into account as to the possibilities of major events such as the virus attack.
Well, thank you, Lynn. Thanks so much for your time today. Thank you to our audience as well. I hope that you'll look for the other 2 parts of our school funding property tax connection series, which are case study presentations on South Carolina and Wisconsin. I also hope that you will check out the wealth of property tax information that the Lincoln Institute has on its website, www.lincolninst.edu. Among other resources are significant features of the property tax database and our state-by-state property tax at a glance visualization tool and narratives will give you in-depth information on the property tax in each state. Thank you so much.
Could I just throw an endorsement your way in terms of the database of the Land Institute? At various times in my life, I've needed to go find it and always have found it to be of high quality and great use.
Thank you so much. That's music to my ears.